So good morning, everyone. Thanks for being here. I know some of you are probably expecting Rick. Rick's internet went down, hasn't come back up yet, so I jumped in for him here this morning. So sorry, you'll have to listen to me first. Uh, the topic for today was talking about favorite patterns in the market, and I have quite a few patterns that I really like, but I'm going to just narrow this down to the ones that I really, really like and that I find to be very, very useful for me. First off, when we talk about patterns, I have to go back just to give you just that little bit of primer on price action patterns that are important to me first, because every technical pattern in the market still has to fit this criteria. So let's say, for example, a stock had been moving up and found a support level and failed that support level in the chart. For me to even consider this chart at all when it fails a support level as a potential trade, that stock needs to recover that support and hold the higher low, because it's only with a higher low you can resume a trend. If this was trending over here, it's only that higher low that'll allow that trend to resume, because any rally back up here that doesn't hold a higher low, remember, can completely reverse from that resistance, turn around and make new lows. Okay, so we need to see that proof of hold. The same would be true on any short trade setup. If the market has been down and we start to come back up in that market, I need to see those trends break, those downtrends break. I need to see a higher low put in, and that's the resumption of an uptrend. And you guys can give me any chart, and I can show you that pattern, because it has to occur. It's the only way trends are built in a market. And first and foremost, my favorite pattern is a trend. I have to have either a trend up or a trend down and a technically correct pattern to be able to trade. Now, I did a class on Tuesday night on price action things in here, and as you can see in this chart, we've got the diamonds that's conflicted right here. We've got lower highs setting up the downtrend. We've got higher lows trying to hold the uptrend, and we're wedging in this pattern, and so we don't have a technically correct pattern. And one of the easiest ways, I think, to identify whether your pattern is technically correct or not is by using the trendinator. I know Rick calls it the trendicator, but is by using that trendinator to see that pattern setup. So it's very, very simple. When we have been moving down, making lower highs, we cannot have a bullish upside trend until that can cross over and hold that higher low. Can't happen. Okay? Because we see many times where we'll cross over up with a big strong move. We even break the resistance here, but it doesn't hold a higher low. Consequently, it makes a lower low. How many of you guys have been trapped into that trade? I have trapped myself into that pattern so many times, chasing that crossover move and not waiting for proof that it can hold the higher low. And consequently, when it can't, I'll buy into that and just get destroyed, just get hammered, because it pulls back. So first thing we've got to have is that technically correct pattern within a trend to show me that the bulls or the bears are stepping up. On the bearish side, when we cross down, we rally back up here, we cannot hold, there's our short trade, and it just continues over here. We crossed up, here. So I can't make this a long trade until this proves to hold the higher low. And so far, look what's happened. We've crossed back down below the trendinator, giving us that possibility that we could just continue this failure pattern in here in the chart. So right now, the diamonds is very conflicted. It doesn't know what it wants to do. It's waiting on something here in the market. So when you're looking for those patterns, that very simple, technically correct pattern in a trend is one of my all-time favorite. And I spent so many years studying the price action of those trends and those patterns, and when patterns reverse or trends reverse, and it's always the same. In fact, I'm going to give you guys right now just an opportunity. Shout out a stock and I'll show you the same pattern. It happens over and over and over in the market. It cannot be anything other than that. And if you'll wait for those patterns to develop, you'll have better returns in trading. Microsoft, where did the higher low begin here? Break the downtrend, there's the higher low, and we start an uptrend. Break support in here, try to rally back, can't hold, the downtrend begins. You can even see it over here where we crossed down, broke support, rallied up, could not hold a higher low, failed. So if we look for that technically correct pattern, and if I put the trendinator on there, you'll see those patterns in here. Crossover up, unable to hold. Don't trade that trade. Crossover up in this pattern, hold. We start moving up. Now we need the next hold to resume or continue that trend to the upside here on Microsoft. CCJ is really simple in the fact that the higher low, there's a lower high. We made lower low. Here's the first higher high. Crossover up, hold. And ever since then, we have held and continue to move higher. We did double top right here, but notice we didn't make a new low. Okay, so the same pattern continues. When we make a lower high in the chart, if you want that trend to be up, then we have to make the higher low to resume the upside trend. Okay, so studying those patterns are very, very important. Studying the trend is very, very important. When we reverse out of downtrends, it's the same thing. We cross over up and we hold the higher low. That begins the upside trend. You cannot begin an upside trend until that's occurred. You can have a lot of false breakouts, and you can try to chase those. False breakout here, fail. Wait for the higher low to occur in those upside trends, and you'll have better chance of a winning trade. If you take right here on when we fail in this pattern right over here, and by the way, this is what I used to do all the time. I would pull my chart back to a specific time, and then I would study this price pattern. By going, I would step it forward one day at a time. Okay? In that price pattern, you can see cross back down. So we're waiting for a bearish technical pattern to establish. That means we need the rally back up, the test resistance, and we're looking for the short. There's the lower high. Downtrends always begin with the first lower high. From that point on, every lower high after that has to be looked at as a potential for the next short setup. Okay? As long as that trend exists, the lower highs are where we'll find our short trades. Here's a crossover up. Almost fails to hold. And there is a whole bunch of chop in here. When we get those crossovers down, crossover up, we get tempted by these bullish candles in here. We jump on them and we get stopped out. This is what I call chop. This is when we cross up, cross down, cross up, cross down. Wait for the higher low. Oftentimes I got myself caught by chasing into these trades and found that when I eliminated those, when I quit trying to press every single move in the market as a trade, my win-loss ratio went up, not because I changed the way I traded, it's because I eliminated trades that provided too many stop outs. Crossovers will only work about 50% of the time. Okay? When you let the crossover occur and then hold the higher low, your win-loss ratio goes up. This trade here will give you about a 75%, 70 to 75% probability of success. Hold the higher low. Be in a technically correct pattern. If you can hold a pattern that is in trend and close to support, improves the odds of that trade. Yes, for a new trend to be established, a higher high and a higher low has to be put in place. Okay. Now to confirm that higher low, okay, for this to confirm that the trend is valid, it must make a higher high. You don't know that when you put the trade on. You don't know that that's going to happen. All you can base your trade off of is we've got a good technical higher high in here that tends to bring in buyers. The higher high confirms that the trend was valid. Does that make sense? The lower high over here suggests downtrend could be starting. It only confirms when it makes a lower low. And the reason I say that, guys, is because of patterns like this right here. We push down to a low, we rally back for a potential short. This short would have worked, but it doesn't make a new low. Okay, so it doesn't continue the confirmation of the downtrend. You may have made money on this trade, but as you approach that level and we start to see bounce, you better take your profits on it. That's how double bottoms, double tops, W formations get formed in the market. We didn't get confirmation that the trend is continuing to the downside. You'll typically see these be coupled with a drop in volume or momentum. If you look at T2101, momentum of the market here shifted, that we ran out of downside momentum. So it comes out, and then we wait for that next signal here. And what I'm talking about here is the directional trades. If you use credit spreads or something like that, you can utilize these patterns as well very effectively. But if you're a directional trader, those are my favorite pattern setups, and because they produce at such a high rate. And you know, the thing that is important to me nowadays is the discipline to wait for a good pattern. In my younger days when I wanted to press every single day for a trade. I would take trades like these and it would cost me. I learned finally that I make more money. Sometimes trading less, but waiting for the better patterns to occur. Market. Now these kind of patterns that I'm showing you here will also correspond to some of my favorite technical patterns. Rounded bottom breakouts. Okay, the rounded bottom breakout, this is Rick's pattern here. Love this pattern, but it still has to follow the same rules. Okay, when we cross back over that 50, we've got to hold the higher low. Okay, so when you look for these patterns within moving averages, and by the way, it doesn't even have to be in a technically perfect rounded bottom breakout pattern, meaning that there's 10% between the 50 and the 200. The pattern itself still exists. Notice here, this isn't even a rounded bottom breakout. This is a cross back up above the 50. There's the higher low. That trade works. Okay, so when you incorporate your moving averages or the patterns that we talk about in the room, the rounded bottom breakout, the blue ice failure pattern, fantastic patterns to trade. So let's take, for example, a trades that are setting up right now in this possible pattern. Here is a possible rounded bottom breakout coming together on AT&T. AT&T, as you can see, breaking the downtrend. We're coming into a place where we may create our higher low near a price support in the chart. Now, I can't tell you yet if this is going to hold. As a matter of fact, if you look at our trendinator, we're holding in there perfectly. But I can't tell you that for sure. All I can tell you is this is the kind of trade that I'd want to set a price alert on, or just make the decision I want to buy it here. My stop loss goes in under this level, and then I let the trade work. Let the chart work. Because the pattern is true. You'll see it. You go back and just go through lots. Don't take my word for it. Take a list, go through hundreds of charts and look at it. You'll see it. It occurs every time. They may be different in amplitude of moves, but it occurs every time. The only way a trend reverses. So when you're looking at this, I don't know if this trade is going to win. Notice we can have short-term wins and then still fail. So you still have to manage the trade, but there's the pattern chart, and it corresponds with a rounded bottom breakout pattern. Okay. I will tell you the rounded bottom breakout pattern combined with this price pattern is a very, very powerful pattern. It repeats itself over and over and over in the market and can be one of the an extremely profitable trade. Because once you start in this upside move to the upside, keep moving, we start establishing this trend. This can produce patterns all the way up to the 200 and beyond. You can repeat the same trade in the same stock over and over and over. Okay. The same is true when we fail from a top. Okay. This ended up double topping in here, but you can see the pattern right here on the blue ice failure. We fell below the 50, we rallied back. This is the lower high. This is the short trade that you're looking for. And every rally back past that, as long as that trend exists, is another potential short trade. We had this huge dose of volatility in here. Let it work. gap lower, rally back. There's your first opportunity at the lower high short. Rally back, next opportunity for the lower high short. And you continue to repeat that until that trend breaks. Okay. So the lower high, the higher low, that technically correct pattern. So if I come over here and I draw a pattern that moves like this, do you guys think this pullback here is going to stay above the trendinator right in here? Will this be above the trendinator? Even if this puts in a higher low right there, a little higher low, probably going to be below it, isn't it? Now, what I said is when we enter an area of chop, you want to recognize it and stay away from it. Because a lot of my losses in my trading come when I get a little bit too rambunctious and try to jump into a trade, and then we just continue to cross over up and cross over down. We're not getting the technically correct pattern. Okay, so be patient. Wait for the pattern, because you'll have a higher number of winners if you wait for the pattern. You know, and it's just being discerning, looking at the chart for what it is, not for what you want it to be. And I do most of my look at charts right here, because that's how I studied them. But you can see that pattern very clearly here without any indicators. How about Verizon? Anybody like what Verizon is doing right here? This is going to be the same type of pattern, trying to break that downtrend. This one still has a little bit of a question though, doesn't it? Can it break out of that? But the higher low pattern is correct. Support is correct. And then if we look over here, it's also a round and bottom breakout. So when you look for these patterns, see if you can compare them with anything that you want to confirm them with. I really don't need to confirm them anymore, because I have so much confidence in the pattern that if I believe the market's ready to trade and the pattern is there, I want to trade it. Okay, so look at those rounded bottom breakouts. You guys already know those. You'll probably hear Rick talk about them if he gets back today. One of his favorite patterns, and the blue ice failure. And you're going to find those patterns to be identical, just the opposite side of things. Let's take a look at FedEx here. FedEx created a lower high here, now crossing down below the 50. So what's the pattern, guys? First, we broke this trend, right? We broke this trend and made a lower high. We could have taken a short. Short it down to the 50 because we're so stretched away from it. Where's the blue ice failure going to occur? On the next lower high. Fail that 50, watch that 50 potentially flatten out and turn. I can't see the future. I don't know if this is going to happen, but they'll look a lot like that. That 50 will flatten out and turn. We'll rally back. We'll find that resistance in the chart. And we'll see our next short set up. Right. And you can find them like this with the trap trade. Notice in here, this was not a short. Crossover up. Fails. Hasn't quite made a new low yet. It hasn't confirmed the downtrend here. This could double bottom, right? Not saying it will, but it could. So if I'm short in here, I've got to watch this pretty closely, and I shouldn't be short because of the crossover up. Okay, so watching this in here, we need that next technically correct pattern to show itself in the chart. If we hold this support and bounce back up and crossover up, we're in chop. Cross up, cross down, cross up is chop. Stay out of it. Wait for those patterns to develop so you get that clear picture. Come out of this mess. Here's the chop. It'll just tear you to pieces. Wait for this to occur. Get your higher low in here. Now, I'm not saying I would have traded this, a lot of volatility in here, but you can see the pattern. Crossover up and hold. And then we start the uptrend. And every repeat of that pattern is another opportunity to trade it. Any questions on this, guys? And I know this isn't the sexiest of stuff because it really is more price action study than it is anything else. But all I do is pattern trade. Technically correct patterns. Now, I did a class years ago on the pop out of the box. The pop out of the box hasn't been showing up a lot in the market here recently. And that's because of the wild volatility that we've been seeing in these big swings up and big swings down. The pop out of the box doesn't occur all that many times. But the pop out of the box is truly one of my very favorite patterns. Because when the pop out of the box occurs, I don't have to take much risk on the trade. Notice in here where we push down and we get all this volatility in here, I have to take more risk on this trade because of that volatility. Don't want to take that risk if I can avoid it. This trade here where we're moving in a trend and then we consolidate sideways over. My very favorite pattern ever. Because I don't have to rush to this trade. I don't have to predict it. I don't have to do anything other than identify that this pattern is setting up. I place a price alert in here where I would like to be in that trade, where I can see proof that the buyers are overcoming the sellers. I place a price alert. I wait for the trade. My stop loss is usually close and tight. Now, I have always said that the pop out of the box pattern requires from the top side here to the bottom side, you only want about 3%. Okay? And the reason is because if I buy this up here and have to get my stop loss underneath here, I'm going to have a 3.5%, 4% stop. I don't want much more than that. And that's on the stock itself. Okay. I don't want to have much more than that because that increases my risk. I want the tightest little consolidations that you can find. Rob, are you talking about on the pop out of the box pattern or what we call the pullback opportunity pattern? Pullback opportunity. If I were looking at getting into, you can see this is so congested in here. This really does pull back. It's not the pop out of the box pattern. Pulls back because our lows are down here. if I want to look at the price pattern itself and ask myself, where would I see that the buyers are taking over in this pattern? And for me, looking at this pattern right here, it would have to be in here someplace. That's where the buyers are taking over and resuming things to the upside. And then you always have to calculate your stop losses down here. Is that a risk that you want to take? Because the volatility on here, probably not one I would have been interested in taking. Okay. Let's grab another chart here. Rivian has been moving all over the place. So Rivian crossing up here, pulling back. So I'm looking at this chart and thinking, right now, if I placed a price alert up here, how many of you would agree if the buyers push this stock above that level, they're probably going to come in and push to the next resistance level? Okay, so when you see those patterns, you place an alert there, and it doesn't matter if it's a consolidating pattern or if it's more of that pullback pattern in the chart. You look at the chart and say, where's my stop? Where's my entry? Is that an acceptable trade? Okay. Now, I can see this occurring before that candle ever happens. And this is a big difference on the way I trade versus the way most people trade. Most people run scans looking for the white candle. How many of you guys will look for the white candle and find that by the time you get there and there's no way you can take the trade? Too much risk, right? Can't chase that. I want to find those patterns before those candles occur. Okay, so I'm always looking at that pattern ahead of the actual signal for entry. I can see the pattern developing. It takes no time at all to draw a line across here, set that up. I always change mine to pink, so that does take a little bit so everybody can see where my alerts are, and set the alert. From that point on, I really don't have to worry about this. I really don't care. I put no emotion in this whatsoever. I don't care if it fails. It makes no difference to me. If it fails, I know that this alert saved me from the anticipating of buying this, and I don't have to trade it. Does anyone remember? Somebody asked me, oh, I just remembered the stock. Generac. Someone asked today, is anybody interested in buying this? Well, when we looked at this earlier, it's a black candle. Now, looking at this pattern, does anyone think I'm going to be really interested in buying this if this was a black candle down here? It looked like this. I'm not interested. But let's say before that candle occurred, before this volatility in that, before that candle occurred, if I'm looking at that right there, how many of you would say that's got a potential of producing? I would. That's a pattern we're looking for, right? Crossover out and hold. So if I put a price alert on this chart right in here and say cross up above here, and I'm going to be interested in buying you, alert me when that occurs. When this thing fails, I don't care. It doesn't hurt me. Okay. The other thing I have a concern with in this pattern right now is we broke that trend. So what's the rule here, guys? The rule that we just talked about, if we break support, what has to occur? The stock must recover, because I know there's people looking at this hammer right now saying, oh my gosh, I got to buy it. Look at that, it's reversing. This thing's going to go up. What if it goes up and then just comes right back down? What if it can't get back up there? Okay. So it has to recover this support, get back above, prove to hold, then show me an entry. And I don't care if it occurs here. I don't care if it occurs here. All I want is the higher probability trade. Support and trend, if it's up here, I don't care. Show me the technically correct pattern. Okay. One thing I've learned is a trend is a trend until the trend breaks. We're in a very volatile market right now, and I understand it's very, very challenging. It's very frustrating. It's frustrating for everyone. But if you follow some of these basic rules, you'll have fewer losses. What you'll probably also do is trade less, but you'll be making more money because your losses go away. Okay? Being more patient to wait for that good pattern to set up gives you that higher probability trade. This making some sense, guys? And by the way, if you're intraday traders, anybody in here intraday traders? It's exactly the same. Now, I actually didn't open my live futures trading account. This is the paper trade. It's set up exactly the same way that I do my live trading account. So far this year, I'm up over $60,000 in futures, in my futures. Don't trade it that much. But notice here what I say is true, and it takes discipline. Notice in here, this rally produced no higher low and then crossed down. So the discipline you have to follow is stop chasing, wait for the right pattern. You can see over here, we could be setting up that pattern here that we can get the higher low. A technically correct pattern to trade up. I don't know if that'll occur. See what's happening now? It's not proving. I haven't made a trade on IWM all day today. Haven't even been looking at it today. How about over here? Anybody see the technically correct pattern here? Break the downtrend, hold a higher low. Doesn't matter if you catch this, or catch this, or catch this. It's all the same. For the downtrend, it's always the same. Take a look at this over here for the downtrend. We cross down, we rally back or consolidate. Those are your short trade setups. Following the trend to the downside. Okay. So intraday, and this is futures. This is a very fast futures chart. Rob, there is no entry here. Cross up and cross right back down. We've even broken this support. There's no long trade here. There's no short trade here either because we haven't made a lower high yet. Okay, we've got to follow the discipline pattern. By the way, guys, if you ever want to practice this, turn on a paper trade system and set your time frame, whatever it is that you want to trade. It doesn't matter what it is. If you want to do a 15-minute diamonds chart, 10-minute diamonds chart, 10-minute whatever, and practice. Okay, because the shorter term patterns repeat themselves over and over and you get more occurrences. So for example, if I go to the diamonds and go to a 5-minute chart, the same patterns are true. Break it down trend, hold a higher low, there's your entry trade. 5-minute, same pattern. When we get into this junkie period, stay away. Wait for the next technically correct pattern. Third right here. Not a good trade. If you held it, you did okay. Managed through that, you did okay. We're in a very, very choppy. One of the reasons I didn't turn on futures is we're just in this really uncertain, choppy area of the market. So I don't even want to be tempted to trade futures right at the moment until we can pick direction and stop the chop. So look at those patterns in any time frame. If you want to take longer term trades, just pick your time frame. It doesn't matter if it's a 2-day, a 5-day. Take a look at CCJ and let's make it a weekly. So crossover up, crossover down, stay out of it. Crossover up and hold, buyers step in. There's an entry trade. There's an entry trade. Just continue to repeat it. Okay, every time frame, it doesn't matter. So here again, my favorite patterns are in the price action itself. When we can combine those with moving average patterns or something like that, those patterns that we talk about, rounded bottom breakouts, blue ice failures, head and shoulder tops produce the same kind of pattern. Head and shoulders bottoms produce the same type of patterns. Just make sure you wait for the technically correct pattern and you can clean up your trading. And hopefully this shows you too that good trading is an awful lot about being patient and waiting. One of my favorite quotes from Charlie Munger, Warren Buffett's right-hand man, said, I'm paraphrasing it, but he said, trading is not about the buying and selling, it's about the waiting. If we wait for the technically correct patterns in here, we'll produce a higher percentage of returns. And what I mean by that is a higher percentage of wins. It's very, very difficult to be a profitable trader when you're only winning about half the time. It can be done, but it's difficult. With the volatility of this market, you can see the upside move kind of gets muted right now, where the downside move gets all kinds of energy. So in that circumstance, the 50-50 trader is actually losing by and large. So if you can remove that aspect where you're trapping yourself into bad trades because we don't have patience and we wait for the good quality trade to set up, we have more winning trades. And for me, guys, this is really important. I don't have to trade every day. I have no desire to trade every day if the pattern isn't correct. Okay, for me, it's more about looking at my win loss ratio and saying, I'm maintaining a 70% win loss ratio. That's what matters to me most. Because if I do that, I make money. But if I break that discipline and I just have to trade, then I put myself in that situation where I don't make as much money. I'm more active, but I don't make as much money. You're exactly right, Kevin. This is a very, very dangerous market right now because of the chop. There are stocks out there like CCJ. There's showing nice bullishness. Whoops, not that one. Nice bullishness trends. They're out there. Okay, but there's also a lot of chop, and what we're seeing is the market doesn't have much momentum. We're trying to make that decision. Are we going to go up or are we going to go down? Who's going to control here? And honestly, we might be in that same kind of pattern until the next earnings season. We may have a full month of choppy uncertainness in the market. Certainly we have data points coming along that could spark that up here a bit. We're going to have PPI numbers, CPI numbers. We've got another Fed decision coming up this month that could change direction and get us moving prior to that. But if those don't spark attention for us and really move the market, it's probably going to be the next round of earnings. So recognize those times of chop where we've chopped up and chopped right back down here in the market, in the Dow, in the SPY, in the QQQ, in the IWM, and realize we're in a choppy area of the market. So try to do less trading until we kind of figure this out. We can figure out a direction. Okay, we're current trends are downtrends. No one wants to hear that, but that's the case. That the current trend is the lower high here. Tools and colors on me. What we're waiting for, we've already made the lower high. What we're waiting for is to see if this downtrend confirms that we're going to continue to go down by breaking that low. Okay, same for the diamonds. We crossed over up, now we've crossed over down. The question is, will we make a lower low or will we make a higher low that crosses back up and holds, and then we have an upside trend? If this crosses down and fails, continue moving lower. BW, yeah, particularly if you look at a weekly here, longer term, you can kind of see it a little bit easier. It is possible that we're creating a little head and shoulders here. But to be honest, it's more about the push and pull right now in the market. We're just trying to figure out what the next move is. And we're so uncertain. We see all the weakness in China. We see all the weakness in Europe. And we just have this cloud of uncertainty over us, not giving us a clear picture of the path forward. And so consequently, volumes have been dropping because we're just so unsure. No one really wants to be a seller. No one really wants to be a buyer. We're just waiting on the next thing that can get us moving. Guys, I want to break this off here so that you have a few minutes to use the bathroom, take a break, do whatever you need to do before the next class. I hope you got something out. Any quick questions that I can answer on this? And honestly, I hope you found something in here, because what I've found in my life is if I simplify my trading, It is recorded, yes. If I simplify my trading, if I let price do the leading, nothing else, price, I can have all kinds of indicators, and that's fine. But until the price pattern identifies itself as bullish or bearish, stand aside. Okay, I'll scroll up and see if I can find it, but oftentimes I can't find it because I don't know how far back it is. So, thank you, Alpha. So, Rob, if you could type that real quick, I'll wait. JP Morgan. You can see your first potential cross in here. Your first potential short was right in here. You made a lower high here. We crossed down, consolidated over. That was your first opportunity short. But I'm guessing you're asking about this area here in the chart, and that would be that failure pattern right here. So what I would want to have done is look for a grouping of candles. Okay, do you see a level right through here? I draw that line. That candle touches it, that one touches it, that one touches it, that one, and that one. All of those touch that line. Set an alert. Fall through there, take your short. That still gives me a relatively low risk entry on the short trade, stop loss above that area. And that's important too. Use the price action to set your stop loss. You can see in this candle with this whipsaw that we had in here on this candle, if you set your stop too tightly, you're whipped out at a loss before this trade wins. Yes, alerts are just an easy way to remove that emotion. Remember, when you set an alert, you're thinking more like a business person. Okay, this is the trade I want. Now show me that you can do that. I'm willing to risk on that trade. If you race in on that trade anticipating this is going to be a good trade, oftentimes you end up being disappointed, right, on that trade. So make the trade come to you. That puts you in control of the market rather than the market controlling you on emotion. Okay. Oh yeah. Do lots and lots of charting, find lots and lots of great charts, and then it moves too quickly, you don't catch it because you're looking at other things. If you have the alert, that prevents that problem. Okay. Well, I mean, no, Rob, think about it. I mean, you could technically right in here come up here and say, well, fail through that candle and I want to, this white candle, I want to be short. Because the closer and closer you identify that, the lower risk you take on the trade, right? Your stop loss goes above that area. But make sure you're looking at the chart itself, not trying to push a chart to do what you want it to do. Make it do what you want it to do. Okay. All right, guys, I'm going to break away so you can have a quick break. I'll wish you guys all the very, very best. Thanks for listening to me today, and I hope you got something out of this. Up next, I don't know. Maybe Ed can tell you. Up next is John or Rick. I don't know. I'll be here listening, though. Thanks, everyone. Have a great afternoon.